Hello, hello. How is everybody doing? This is Chart Supreme, and just wanted to do a video today on candlesticks. Basically, the most important part of a chart, the candlesticks, the Japanese candlesticks. These bad boys, as you can see here. And I just wanted to go over them real quick. Real simple stuff. So let's just jump right in. So a candlestick basically is showing you price action over time, depending on time frames. And I'm going to explain this really simply, but we're just going to start with the most rudimentary element, which is the candlestick's anatomy itself. So mine are essentially the same as any other, just different colors. Instead of green, I have white. Instead of red, I have blue, just to allow for some distinguishing whenever I'm coming to support and resistances. I think it looks nicer, but you may have yours on the traditional color palette. So, but all this still applies. But yeah, so like for instance, we're going to start off with like this candle here. This candle, or candles in general, have an open, a close, a low, and a high. You may be familiar with the term OH, OHLC, open, high, low, close. You'll see indicators use this information. They're referring to this, taking information from candles based off of their opens. Like in this case of this, let's say upward candle, the open was here, it closed here, thus making it an upward candle. This was the low, this was the high. Open, high, low, close. And the same thing here, like this is a down candle. So by virtue of it being down, the close is south of where it opened. So there you go, that's your rule of thumb. On a downward candle, price closes south of where it opened. On an upward candle, it closes north of where it opened. I know that's self-explanatory, but I do want to make sure that everybody does understand that. And so you want to use them to be able to read, just like a musician looks at instruments. You're going to do exactly the same thing. And the time frames are key, because you want to use them to better interpret the candles. So for example, if I'm going to be drawing my support resistances for the 4 hour, I'm going to be on an hourly time frame, I'm going to read candles and draw my lines and rely on that information in that time frame. And I'll tell you, like for instance, it looks different on different time frames. This is my way of doing it, to where different time frames show different support and resistances, because each time frame has different support and resistances. And but yeah, so for instance, we're going to start on lower time frames. Everybody likes lower time frames. Makes it easier for them to be able to get in and out of trades. So here we can just see here that this candle, for example, price opened here. So this is a 4 hour candle. After 4 hours, another candle is created. After 4 hours, another is created, another is created, so on and so forth. This applies to all the different time frames. So in this particular situation, this candle opened here. At some point while this candle was open, before it was completely closed, before the ink dried, it had, as they say, auctioned. The price had auctioned as high as here, which according to TradingView is 99,143.50 cents, and to a low of 97,235. Ultimately closing quite close to where it opened, actually. And by the way, I'm getting the statistics from up here, in case you were wondering. So that bad boy closed 98,822. But yeah, so Now, back to what we were saying is you want to read the candles so that you can understand what's going on. And I know we're kind of jumping around here when I go into support and resistance, but they really go hand in hand together. You know, we're looking at these candles. Now, if you're asking how do you know if it's an uptrend or a downtrend, well, just take an element on the chart from previous to now. If it's going in an upward direction, you're in an uptrend. If it's going in a downward direction, you're in a downtrend. If you're looking at it in a smaller time frame, well, from here to here it is a downtrend, but in a larger time frame, it's still indeed in an uptrend. But yeah, so and all this price action goes into larger candles. But yeah, so going right back to this. So now we look at these candles and we see, okay, price comes up to, 89.5, right? Yes, it's going to paint, as they say, which is a terminology for how the candles essentially move around before their close, is they're painting on the chart. So they'll paint around, they'll move up and down before ultimately leaving evidence of where somebody or where there's a clean area where orders have been stacked consistently. If I'm drawing them based on a 4-hour, or if I'm looking at them on an hourly, I want to be 1 hour, 2 hour, 3 hour, 4 hour, 5 hour time frame. You want to be using them on that time frame. Resistance, resistance, support, support. That was enough to essentially establish this as an SR. Using the candles, you're able to isolate them. You're able to identify them. So that's why these open, high, low closes are so important. And we're going to do a lot of videos about these because there is a lot of stuff. And I don't like for one specific video to get too long, but no, definitely we're going to go into a lot of detail and make everyone gurus. Everyone's going to be a guru. But yeah. So for instance, like I said, this is I'm using these on hourly. When I say hourly, that's anything with an H. 1 hour, 2 hour, 3 hour, 4 hour. I use what are most popular. 1 hour, 4 hour. 12 hours is mostly for me trying to get like a zoomed in view of the day. But you don't want to go into your own custom time frames. You can, and you'll get different looking candles. Like I can go to, for example, a 13-minute chart, and my candles will be custom tailored to that time frame. But this is a time frame that if I, let's assume I think, ooh, I'm seeing some sort of secret time frame, or this is what the market makers are using. That's just not the case. You want to be using the theory of large numbers. You want to be trading on the side of everybody else. When you enter a trade, you want everyone and their mother to enter at the same time as you to push price in your direction, right? So we don't want to be doing custom time frames. We want to be sticking to the standards, the ones that everybody, whether you're in Europe, Asia, whether you're American, whether you speak English, Spanish, Chinese, whatever, you want to see the same information. You don't want to be getting your hot take or your hot version and then later on regret why did that happen. So now, like to my point, we're reading candles now on a daily. Our SRs are going to look different because the way the candles are different. The shadows, the wicks, these show areas where price really just didn't stay very long. That helps you interpret, okay, wow, when price came down here, there was a tremendous amount of demand here. Before you would draw your line, you want to look to the left. Does that make sense? Yeah, look, it closed right here. This is a daily time frame. That'll be your daily support. So you want this support to be looked through the lens of daily candles, if that makes sense. I don't want to see this support level on a weekly. I don't want to see it on a 4 hour because the candles are not going to be able to, they're not going to respect those levels. You want to see those levels on those time frames. But yeah, so support, wick, closed bodies, telling you that's stacked orders. That's footprints, breadcrumbs of stacked orders. Is if bodies are consistently closing in proximity with one another. In the wicks, you can draw lines from wicks, but that's for different purposes. So like for example, you still want to see closes above this line, but you can have price wick down for like a swing failure pattern or to try to grab stop losses. And I could put a line there, but this is the line that matters. Why? Because if price, let's say, came down here, right, and that candle closed below this level, then I can potentially look for lower price action, right? But if the candle came down and then came back up and closed above here, that means it wasn't accepted down here. It auctioned down here and came right back up. It was bought up pretty aggressively. Therefore, that's why this level matters. I want to use a close. I'll draw levels based off of wicks from time to time, but again, we want to make sure that they're proportionate to the time frame so that the candles can be read effectively. Now, yeah, you most certainly could draw one actually there. And a swing failure pattern would be perfectly acceptable for that. You know what? Let's go ahead. And there we go. In these type of situations, let's say price dumped. You know, you would want to see if it closed above here, but you could look for getting your entries down here. It being a swing failure pattern, which we'll go over as well. Swing failure patterns basically just means price comes down below a low, a swing level, essentially taking out stop losses and then coming back up to close above it, essentially saying, hey, I'm accepted back up here. And whenever you get acceptance back into a range, assuming this is a range high, range low, you'll target intermediately, the middle, and then the high. So that's essentially saying it's got acceptance there. We'll go into all those more in detail later. But yeah, that's essentially really what it is. So if I'm going on, you know, like let's say my hourly, my SRs have changed versus a daily. And as you can see, price has a sticking point based on these bodies here. Could I have done it to the wick? Sure. Looking for a swing failure pattern? Yeah. But, you know, I guess I'm able to multitask. I don't need to draw my lines in areas that aren't as, you don't want to have a messy chart. You want to keep your charts as minimalistic as possible. You don't want to get analysis paralysis as a consequence of all that. So stick with what you need. Anyways, speaking of which, check out this hourly. Like these levels were drawn on a 4 hour, but I want to get a zoomed in version of the 4 hours. So I'll go to the 1 hour to get my entries, right? Or to get my confirmations. So in this particular case, you know, we had price come down. Like once price came up here and I noticed that this was a tremendous amount of demand, which if you're saying, well, how do you notice that? Well, look at it. Price came down here and then it created an engulfing candle, which means it basically took up the bodies. The entire presence of these candles are dwarfed by this guy. That means there's a lot of demand here and it closed real cleanly. You see these two candles? You see this tweezer bottom, which is a terminology for candles that essentially look like this. That's a fair assessment to say there's an order block or it's an untapped level or what have you, but it should be respected. When price came down to it, set an alert, like you see how I have these alerts? Set your alert, read the candles. Read the candles. You can also read the volume, which I have a video about that, and I'll make more about that as well. But you'll want to see the candle come down. Read it through the lens of hourly candles, right? You don't want to be looking at this level on a 5 minute and then seeing it comes and taps it and then comes up and then you enter and then this thing literally just diarrheas its way back down. That's no good. This was drawn based on hourly interpretation of hourly price action candles. It needs to be essentially, yeah, used on hourly time frames. That's why time frames are very important. And I don't think a lot of people articulate that quite well. I know my videos are involving me kind of jumping a little bit here and there, but I do have a lot of good golden nuggets. So, you know, a lot of people are not familiar with support and resistances, or if they do get familiar with them, they don't really understand how to use them in coordination with time frames. So there's a reason why TradingView has this section here. This is the visibility section. Everything has on and off visibility so that you can take advantage of it. Anyway, so this is a level, it's respected, it's established. When you see this candle closed, you're fine. You can enter here, put your stop loss, target, you know, 1 to 1, a 2 to 1. I would go for anything 1.5 or above is good for me, and that would definitely get you a 1.5. But next time again, you put your little alert here using TradingView. You just right click, go add alert. Price comes to it. Wait for that hourly candle to close. These are hourly levels. This is a down candle. Sure, it did close above it, confirming that this level is indeed a respected level, but that's no good. And this is no good. We want confirmation. This is no good. We don't have any bodies. We don't have any green candle bodies that could be said they're signs of strength. So we still wouldn't enter any longs here. You could try to enter a short here, and then just put your stop loss above here, and then again at 1.5 to 2 risk reward, you would have hit your target. Just put your stop loss right there, and you would have been just fine. Candle closed up here. Anyways, this is considered a failed auction, more or less. Well, yeah, it would be. If this continues up here, this is very much, well, by now it is considered, because price spent time down here, gained acceptance back up here. Look how many hourly candles have been closed up here. So this is indeed a failed auction, which means that this has now been validated for potential rotation back up to here. Price basically just has ranges. It just ranges from lows to highs. You could say that this is a range low, this is a range mid, this is a range high. And then you can also say that this is a range low, this is a range mid, this is a range high. And a real quick nugget for you, whenever you're trading ranges, the middle is your intermediate take profit. You don't want to be entering positions here. I mean, you can, but I wouldn't do that. I mean, you can. You certainly can. With good risk management, you can do whatever you want. But you don't need to take every trade, right? And who's got patience to take every trade? But yeah, so price came down. Could take a short here. Price comes down all the way here. You notice that, wait a minute, price is not able to close below this level. So this is a fair assessment that we're probably not going to go any lower. Is that a long entry? Sure. It looks like it's a front run of this right here. So this wick could have been, I guess, filled, unfinished business, maybe a swing failure pattern, but obviously somebody who's got enough purchasing power held the market up for 1 hour, 2 hours, 3 hours, 4 hours. And by the way, we can use volume. This, oh man, I got so many things I could teach you guys, so many juicy things. Just using candles and volumes and support and resistance, or just candles and support and resistance. Keep it simple. Keep it simple, Chart Supreme says. Anyways, so yeah, price comes up. We already hit our short if we wanted to take it, but price comes back up, and you want to make a note of how it's coming back up. Whether you did use volume to enter along, that's perfectly fine, or if not, price comes back up. Engulfing candle shows that there was enough buying power to get you back up in here. Candle close above candle, but it's a down candle. Candle close, back test over here. This is your sign of strength, right? What do I mean by that? Okay, we'd like to see hourlies, 1 hour, 2 hour, 3 hour, 4 hour closes bodies above our SRs. Wicks are accepted to show that price is being accepted. But we don't want this and then have another red down here. So this was your good one, right? It closed over here, auctioned up here, but it closed over here. You enter here, put your stop loss right over here, and then you can target this high over here. Could this trade end up getting into a loss? Sure, why not? Could it hit up here? Sure, it could. But just to let you know, that's how that one is. But yeah, I'm just taking a quick look here. So, I mean, I am indeed curious to see how that goes. And I will have an alert set. I'll probably put an alert around here so that if price comes back down here to test it. Now, a lot of people say, well, what happens if this keeps getting tested? Well, you just want to see it, right? Price can wick down, but we don't want to see bodies close down here. If I start seeing candle bodies start closing below this level, well, then chances are we're probably going to rotate down over here, right? You can close the trade. You can have your stop loss set over there if you just want to have it as a static stop loss, a fixed stop loss. If you like to be more of a dynamic trader, do it yourself, depending on how the candles close. By all means, be my guest. And yeah, I hope you guys appreciate the quality of the information. I am new to making videos, and I do get nervous, so I can get scatterbrained, and I am scatterbrained, and I do get scatterbrained, but essentially I do circle to my points, and hopefully you guys do find values to them. This video is basically about interpreting candles. They're incredibly simple. They basically just show you what price does. You use the chart, you use the x-axis, you use the y-axis, the x-axis being time, the y-axis being price. Use the candles in conjunction with these, right? Read the candles. Wicks mean things, bodies mean things. Don't get tunnel vision, don't get blinded, and you want to use them to draw your support and resistances. I hope I'm making sense here, but yeah. And just before we go, I just want to do a quick, let's do a quick top down on Bitcoin. These are the monthly levels here. These are SRs that we want to interpret through monthly closing candles. So as you can see how we drew them, right? Look at the closes. You can have wicks. When you couldn't get any candle bodies to close up here, that's your entry, right, for shorts, right? Tweezer bottoms, 2 candle closes, cleanly stacked orders. Price comes up, demand level, came back into an old area of supply, right? You couldn't get any, you had a body close here, but you need another upward candle to get your entry. This is not an entry. Look where it closed. And again, perfect. Take another entry if you want. If you're doing a 1.5 or to 2 stop risk reward, you're good to go. Stop loss here, target, boom. But nevertheless, see, this is how you use SRs. You read it, it closed below. Again, expect lower price action. Here we have an established level. Close, close, close. It's support, support, support. Spending some time. It's indecision, dojis. Price came down, right? Support, support. Clean cutoff. Now there is an extra section here that's not visible from 2017 that this was the SR. There was a wick here. This came, tapped that. But this was considered a failed auction. Price spent time down here, right? Was not accepted. Came back up into the range. Accepted with an engulfing candle. That's your entry. Check it out. Oh, what a beautiful back test. But look at this. So in contrast, what did we say? You want to have candles close, right? Monthly candle closing above monthly level. You're good to go. This was respected perfectly. Boom. Continuous. Another one. Continue. You can add to your trade. So on and so forth. And look, just looking at them, support, 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 support. Look at these wicks. Resistance, 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 resistance. It's insane. Man, look at how this candle is going to close. Now you're going to say, well, Brian, or Chart Supreme, how do you know? How do you know? How would you have gotten in on this one? Well, that's why we go to smaller time frames, right? Look how this weekly closed, right? Resistance, 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 resistance. Check this out. Resistance, acceptance, engulfing. Closed above. You can't beat that with a stick. And it's gone. And a little nugget here. Once you get out of a range, the way you target a range is you create a one-to-one of that range, if that makes sense. So this range, a one-to-one of it would have been here. So you would have hit your target. Now this was a long time range, so that's why the magnitude is greater. The longer you spend, the greater the breakout will be. It's a lot of time for accumulation there. But yeah, whatever direction you go and then range, the statistical likelihood is you will continue. That's just a textbook rule. But yeah, daily levels look different. Acceptances. Resistance, resistance, resistance. Acceptance, engulfing. Boom, boom, boom. And you adjust them as you go. Where we are now. Now I have this level here because yeah, that's a tremendous wick. I definitely would like to get into a long if price comes down here. 95.8ish, 850ish. See how this candle closes, you guys. That's a daily. If we get support, 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 nothing closes below, guess what? Target up here. What do we say? If we get candle bodies accepting on daily time frame, this will be a zoomed in on the weekly, and the weekly will be a zoomed in on the monthly, and that's how you trade, you guys. You can use all kinds of indicators and fancy stuff, or you can not be fancy and just be logical and pragmatic. Don't use crazy insider time frames that you think you know something. The billionaires, the rich people, they're using monthly, weekly, daily, quarterly, annually, 12 months, 3 months, maybe 4 months. But yeah, don't go out of control. Sorry for this video being a little bit longer. They're going to get more polished as we go. But yeah, this is Chart Supreme. And it's a pleasure. It's a pleasure and a privilege to be making these for you guys. And I'm going to make more. Let me know if you guys want to see anything specific. And love feedback. Thank you guys so much. This was a video pretty much kind of mixed up, but it kind of gave us an idea. This is about candles. It's about support and resistance. And I got to see some cool stuff. And man, Bitcoin's looking good. But I wouldn't, you know, what an interesting story it would be, you know, because, you know, think about it. If we go into 100K, chances are we'll keep going, right? But it's more of a story to not touch it, I guess. Well, not that it's more of a story. If we end up coming down, right, and I'm not saying we will. I don't know. I'm not predicting the future. You have to let price action tell you. But if we end up coming down, it's more artistic. If it just never came, it just almost kissed it and then never does. Because if it does and then comes down, it's not as storybook, you know. But I'm not too surprised because of this, because of a risk reward, right? You're gonna have a lot of people trying to sell here. Everything along the way here is more of just dangerous, trying to, you know, if you try to sell, you don't know what you're doing, because none of these levels could really be said. But 100K, that's going to give you a good risk reward for a short. I'm not saying that it's going to come down, no. But if there was ever an area to just put like a stop loss or something, to have just minimal capital risked, it would be over here. Anyways, the video's getting a bit long, but I think you guys get the idea. It's all about risk rewards. Anyways, thank you guys again. Chart Supreme out. Have a great one, you guys. Bye.